NMLS Exam Prep. Tips, Part 1. Section 8, RESPA. Prohibits kickbacks and unearned fees. Whenever you see triggers referring to anything of value like a $5 gift card given for a referral, remember Section 8. Question, does a joint marketing venture violate Section 8? Answer, only if one party pays more than their pro rata share of the cost.
Regulation B, ECOA, Anti-Discrimination Law, Equal Credit Opportunity. Focus on the 30-day window for decision-making. Question, when must a lender notify an applicant of the decision on their loan? Answer, within 30 days of receiving a completed application via an adverse action or approval notice.
Reg Z rescission, the 3-day cooling-off period for owners. This applies only to refinances on primary residences. Question, if the lender fails to provide 2 copies of the notice of right to cancel to each owner, how long is the period? Answer, it extends from 3 days to 3 years.
Section 32, HOPA, High-Cost Mortgage Protections. In 2026, the trigger is points fees exceeding 5% for loans over $27,592. Question, can a HOPA loan include a balloon payment? Answer, generally no, unless it is a bridge loan or for a rural underserved area.
Section 35, HPML. Higher-priced mortgage loans, triggered when APR exceeds the APOR by 1.5%, first liens. Question, what is the mandatory escrow requirement for an HPML? Answer, the lender must maintain an escrow account for at least 5 years regardless of LTV.
TRID aliens, the 6 items for a complete application. Once you have the address, loan amount, income, est value, name, and SSN, the clock starts. Question, when must the loan estimate LE be mailed? Answer, within 3 business days of receiving these 6 items.
0% tolerance items, fees that cannot change from LE to CD, includes fees paid to the lender, broker, or non-shoppable third parties. Appraisal. Question, if the appraisal fee increases by $50, who is responsible? Answer, the lender must provide a cure or credit for the difference.
HMDA, Reg C, Data Collection to Stop Redlining. Uses the LAR Loan Application Register to report demographic data. Question, what is the primary purpose of HMDA? Answer, to detect discriminatory lending patterns and ensure lenders serve their entire community.
Red Flags Rule, Identity Theft Protection, FACTA, requires a written program to identify red flags like inconsistent addresses. Question, who is responsible for creating the Identity Theft Prevention Program? Answer, each individual financial institution or lender.
BSA, AML, SAR, Anti-Money Laundering, Suspicious Activity, suspicious transactions of $5,000 or more must be reported. Question, when must a suspicious activity report SAR be filed? Answer, within 30 days of the initial detection of the suspicious activity.
Qualifying note rate. The ability to repay ATR standard for ARMs. You cannot qualify a borrower based only on the teaser rate. Question, what rate is used to qualify an ARM? Answer, the highest interest rate possible within the first 5 years of the loan.
HCLTV calculation, High Combined Loan to Value. This math trips people up because it involves HELOCs. Question, if a borrower has a $100K first and a $50K HELOC with a $0 balance, what is the HCLTV? Answer, use the full $50K limit in the calculation, not the balance.
FHA UFMIP FHA upfront mortgage insurance, currently 1.75% of the base loan amount. Question, is the UFMIP refundable? Answer, only if the borrower refinances into another FHA loan within 3 years prorated.
VA funding fee, one-time fee for VA loans. Varies based on down payment and usage. Question, which veteran is exempt from this fee? Answer: a veteran with a service-connected disability of 10% or more.
HPA-MI Act, Homeowners Protection Act, LTV 78%. Governs when private mortgage insurance must be removed. Question: when must the lender automatically terminate PMI? Answer: when the loan-to-value LTV reaches 78% of the original value.
Straw buyer, a form of mortgage fraud. An individual uses their good credit to buy a home for someone else. Question: a son buys a home for his father but claims he will live there. What is this? Answer: fraud for housing, straw buying.
Equity stripping. Predatory lending targeting home equity. Lending based on the home's value rather than the borrower's ability to pay. Question: what is it called when a lender repeatedly refinances a borrower to drain their equity? Answer: equity stripping or churning.
MLO steering. Directing a borrower to a specific loan. Pushing a loan that is not in the borrower's best interest to get a higher commission. Question: is it legal to push a borrower to a higher rate loan to earn more? Answer: no, this violates the MLO compensation rule.
GLBA safeguards, protecting non-public personal info, NPI. Focus on the physical disposal of sensitive data. Question: how should an MLO dispose of a credit report no longer in use? Answer: it must be shredded, burned, or pulverized to prevent identity theft.
SAFE Act penalty. Fines for regulatory violations. In 2026, the maximum fine per violation has increased due to inflation. Question: what is the maximum civil penalty for a single SAFE Act violation? Answer: $36,256 adjusted figure.
PITA housing ratio. The front-end ratio 28% for conventional. PITA stands for principal, interest, taxes, and insurance. Question: if a borrower has a gross monthly income of $5,000, what is their maximum allowed PITA for a standard conventional loan? Answer: $1,400 $1,000 28%.
Total debt back-end ratio. The relationship of all debts to income, 36% conventional. Only include long-term debts with more than 10 payments remaining. Question: do you include utility bills or car insurance in the DTI? Answer: no, only include debts that appear on the credit report, car loans, student loans, credit cards.
FHA qualifying ratios. 31% divided by 43% limits. FHA is more generous than conventional loans. Question: what are the standard qualifying ratios for an FHA loan? Answer: 31% for the front end, housing, and 43% for the back end, total debt.
VA qualifying ratio. 41%, back end only. VA loans usually do not look at a front end ratio. Question: what is the primary qualifying ratio for a VA loan? And answer: 41% total debt to income ratio, supplemented by a residual income calculation.
Residual income. Cash left over for family living expenses. This is unique to VA loans. It ensures the vet has money for food, gas after paying the mortgage. Question: if a VA borrower meets the 41% DTI but fails the residual income test, can they be approved? Answer: generally no. They must meet the residual income threshold based on family size and region.
The MARS rule, Mortgage Assistance Relief Services, Reg O, prevents scams targeting people in foreclosure. Question: is it legal for a foreclosure consultant to collect an upfront fee before a loan mod is signed? Answer: no. Collecting advance fees for loan modifications is strictly prohibited.
Loan flipping. Predatory refinancing. Refinancing a borrower multiple times within a short period. Question: what is the primary legal concern with loan flipping? Answer: the lack of a net tangible benefit to the borrower, i.e., the loan only benefits the MLO lender.
Cushion, escrow. The extra money held in an escrow account. RESPA allows a cushion to prevent a shortage. Question: what is the maximum allowable cushion a lender can require for an escrow account? Answer: 2 months, 1/6 of the total annual property taxes and insurance.
Notice of transfer of servicing, when your loan is sold to another company. Remember the 15-15-60 rule. Question: how many days notice must the old servicer give before the transfer? Answer: 15 days before the transfer. The new servicer must notify within 15 days after.
Initial escrow statement. Disclosure of the escrow account status, usually given at closing. Question: when must the lender provide the initial escrow statement? Answer: no later than 45 days after the escrow account is established.
Disparate treatment, intentional discrimination. Treating a protected class differently than others. Question: if an MLO offers a lower rate to a younger borrower than an older borrower with the same credit, what is this? Answer: disparate treatment, ECOA violation.
Disparate impact, unintentional discrimination. A policy that seems neutral but negatively affects a protected class. Question: a lender has a policy of not lending on homes under 50K. If this disproportionately affects minorities, what is it? Answer: disparate impact.
Redlining, denying loans based on geography. Refusing to lend in specific neighborhoods, drawn on a map. Question: which law was specifically designed to prevent redlining? Answer: HMDA Home Mortgage Disclosure Act.
Reverse redlining, targeting specific areas for predatory loans. The opposite of redlining. Instead of avoiding an area, you target it for high-fee, bad loans. Question: if a lender targets an elderly neighborhood for high-cost products, what is this called? Answer: reverse redlining.
The Do Not Call Registry. Telemarketing rules. Check the registry every 31 days. Question: how long can an MLO call a former client after a transaction has closed? Answer: up to 18 months. Established business relationship.
Inquiry rule, DNC. Calling someone who asked about a loan, a lead, or inquiry. Question: if a consumer makes an inquiry but does not close a loan, how long can the MLO call them? Answer: up to 3 months.
Kickback exception. What is actually legal under RESPA? You can only pay for services actually performed. Question: can a lender pay a real estate agent for a marketing list? Answer: only if the payment is for the fair market value of the list, not for the referral itself.
NMLS ID requirement. Showing your license number, your NMLS unique identifier. N question: where must an MLO's NMLS ID appear? Answer: on the application, advertisements, business cards, and the website. It does not need to be in an internal email.
Appraisal fraud. Artificially inflating value often involves a corrupt appraiser. Question: what is a common red flag of appraisal fraud? Answer: the appraiser uses comps, comparable sales that are more than a mile away or over 6 months old in an active market.
Asset fraud. Faking the down payment. Using untraceable cash or fake gift letters. Question: a borrower gets a 10K cash gift from a cousin, but claims it's their own savings. What is this? Answer: asset fraud, violation of 18 U.S.C. Section 10014.
Synthetic identity fraud. A mix of real and fake info to create a new person. This is the #1 emerging fraud trend for 2026. Question: what is the primary characteristic of synthetic identity fraud? Answer: combining a real SSN with a fake name and birth date to build a phantom credit profile.
The 5 C's of credit. Underwriting pillars: capacity, capital, cash, collateral, character. Capacity is often the most scrutinized. Question: which of the 5 C's refers specifically to the borrower's ability to repay based on their income and DTI? Answer: capacity.
UDAAP, unfair, deceptive, or abusive acts or practices. Established by the Dodd-Frank Act and enforced by the CFPB. Question: If an MLO purposely uses confusing language to hide a balloon payment, which standard is violated? Answer: abusive, under UDAP, as it takes advantage of a consumer's lack of understanding.
Qualified mortgage, QM, points and fees, the 3% rule for QM status. For a $150K loan, points and fees cannot exceed 3% for the loan to be a safe harbor QM. Question: does the 3% cap include the cost of the appraisal and credit report? Answer: no. Third-party fees paid to unaffiliated parties are generally excluded.
Loan consummation, when the borrower becomes legally obligated. This is not necessarily the same as closing or funding. Question: under Reg Z, when does consummation occur? Answer: at the moment the borrower signs the promissory note and security instrument.
The 373 rule. The TRID waiting period timeline: 3 days for LE, 7 days before closing, 3 days for CD. Question: what is the minimum number of business days between the delivery of the loan estimate and the closing date? Answer: 7 business days.
Business day general. Any day the lender's offices are open, used for initial LE delivery. Question: for the purpose of delivering the initial loan estimate, what constitutes a business day? Answer: any day on which the creditor's offices are open to the public for carrying out substantially all of its business functions.
Business day rescission TRID Monsat, excluding federal holidays. This is the specific definition. Question: for the 3-day right of rescission, does Saturday count as a business day? Answer: yes. For rescission and CD delivery, Saturday is a business day regardless of whether the bank is open.
Easement. A legal right to use another's land, often found on title reports. Question: a utility company has the right to run power lines across a borrower's backyard. What is this legally called? Answer: an easement in gross.
Encroachment. A physical intrusion onto a property. Think fences or sheds. Question: if a neighbor builds a driveway that crosses 2 feet onto the borrower's property, what has occurred? Answer: an encroachment, which can create a cloud on title.
Cloud on title. An encumbrance that delays a sale. Unpaid taxes or unreleased liens. Question: what is the most common way to clear a cloud on title caused by a misspelled name in a previous deed? Answer: a quitclaim deed.
Chain of title. The history of ownership, the family tree of the property. Question: what is the difference between an abstract of title and a chain of title? Answer: the chain is the list of owners. The abstract is a summary of all recorded instruments, liens, encumbrances, etc.
Lender's title insurance protects the bank's lien position, mandatory for almost all loans. Question: is the lender's title policy transferable? Answer: yes. It follows the loan if it is sold on the secondary market, unlike the owner's policy.
Force-placed insurance. Insurance the lender buys if yours lapses, usually much more expensive than private insurance. Question: how many days' notice must a servicer give a borrower before charging them for force-placed insurance? Answer: 45 days.
Note versus security instrument. The promise versus the collateral. The note is the IOU, the mortgage deed of trust is the lien. Question: which document contains the interest rate, loan term, and late fee provisions? Answer: the promissory note.
Acceleration clause. Demanding the full balance immediately, usually triggered by default. Question: which clause allows a lender to call the entire loan due if the borrower misses 3 payments? Answer: the acceleration clause.
Alienation clause, also known as due on sale, prevents loan assumptions. Question: if a borrower sells their home, which clause requires them to pay off the mortgage immediately? Answer: the alienation clause.
Defeasance clause. The victory clause. When the loan is paid, the lien is canceled. Question: Which clause requires the lender to send a satisfaction of mortgage once the debt is zero? Answer: the defeasance clause.
Non-recourse loan. Lender can only take the collateral. Common in some commercial or specialized residential loans. Question: if a non-recourse loan goes into foreclosure and the sale doesn't cover the debt, can the lender sue for the difference? Answer: no. They cannot seek a deficiency judgment.
Power of sale. Non-judicial foreclosure. Faster than going to court. Question: if a deed of trust contains a power of sale clause, what type of foreclosure will likely occur? Answer: non-judicial foreclosure, no court order required.
2026 conforming loan limit. The max loan for Fannie Freddie. In 2026, the baseline limit for a one-unit property increased to $832,750. Question: what is the 2026 conforming limit for a single-family home in a non-high-cost area? Answer: $832,750.
High-cost area limit, 2026. The ceiling for jumbo conforming loans. For 2026, this is set at $1,249,125, 150% of the baseline. In question: what is the maximum loan limit for a one-unit property in a designated high-cost area for 2026? Answer: $1,249,125.
LTV, CLTV, HCLTV. The three tiers of leverage. LTV equals first MTG, CLTV equals first plus second drawn, HCLTV equals first plus HELOC limit. Question: a home is worth $200K BARC. Borrower has a $100K BARC first and a $50K HELOC zero balance. What is the HCLTV? An answer: 75% $150K divided by $200K.
Interest, only math. Calculating monthly IO payments. Loan amount x interest rate, divided by 12. Question: what is the monthly payment on a $300,000 IO loan at 6%? Answer: $1,500, 300K by 06 equals 18K. 18K divided by 12 equals $1,500.
Per diem interest. Interest charged per day. Loan amount X rate, the rate 365. Question: if a $200K loan at 5% closes on the 20th of a 30-day month, how much interim interest is due? Answer: calculate daily 27.40 x 11 days, counting closing day, equals $301.40.
Discount point cost. 1 point equals 1% of the loan amount. Points are always based on the loan, not the sales price. Question: how much do 2.5 discount points cost on a $400,000 sales price with 20% down? Answer: 8,032 kilo loan x 0.025.
Self-employed income 2026. Qualifying with tax returns. Use a second-year average. Question: if a borrower made $50K in 2024 and $70K in 2025, what monthly income is used? Answer: 5,012 K divided by 24 months.
Fannie Mae, FNMA. Federal National Mortgage Association, the largest secondary market entity. Question: does Fannie Mae lend money directly to borrowers? Answer: no. It purchases mortgages from primary lenders to provide liquidity.
Freddie Mac, FHLMC, Federal Home Loan Mortgage Corp., primarily buys loans from smaller thrift banks. Question: what automated underwriting system, OS, does Freddie Mac use? Answer: Loan Product Advisor, LPA. Fannie Mae uses Desktop Underwriter, DU.
Ginnie Mae, GNMA. Government National Mortgage Association. They only handle government-backed loans. FHA va za question: does Ginnie Mae buy loans? Answer: no, they guarantee securities, MBS, backed by government loans.
TCPA 2026 updates. Telephone Consumer Protection Act, significant 2026 shifts in one-to-one consent. Question: can a lead generator sell a borrower's info to 50 lenders at once? Answer: no. 2026 rules require specific consent for each individual caller, a lender.
The Delete Act. Modern Privacy Right, California Multi-State. A 2026 mandate for data brokers. Question: what does the Delete Act allow consumers to do? Answer: request a one-stop deletion of their personal data from all registered data brokers.
Opt-out GLBA. The right to stop sharing info. Lenders must give a reasonable way to opt out. Question: is a toll-free number a valid way to offer an opt-out? Answer: yes, but requiring a borrower to write a formal letter is generally considered unreasonable.
The vesting, ownership, how title is held. Joint tenancy versus tenants in common. Question: which form of ownership includes right of survivorship? Answer: joint tenancy, tenants in common allows interest to pass to heirs.
Subordination clause, maintaining lien priority. Keeping the first mortgage in first place. Question: if a borrower refinances their first mortgage but has a second mortgage they want to keep, what must the second lender sign? Answer: a subordination agreement.
Thank you for watching. Please like and subscribe for more.